MicroStrategy's been kind of tuning their stretch product. So they've been able to kind of raise, they had trouble buying much Bitcoin in the prior bear market. So for anyone kind of following that, they bought a lot in 2021, but they didn't really buy much in 2022. And it's not because they didn't want to, it's because they just didn't really have the mechanisms to do so. But they've been able to kind of tune the knobs differently this cycle. So they've actually been kind of more rapidly accumulating recently, which, all else being equal, does put some upward pressure on the price.
For years, we've heard that the institutions are coming, but as Lyn Alden reveals, they were actually stuck. In the last bear market, even the biggest Bitcoin bulls like MicroStrategy literally didn't have the financial knobs to turn to buy Bitcoin at scale during the dip. But that has just changed. We are entering what some are calling Bitcoin's iPhone moment. Just as the iPhone took the complex world of computing and put it into a simple interface for the masses, new financial innovations are finally allowing the giant pools of capital to flow into Bitcoin without the friction of the past. In this video, we explore Lyn Alden's take on the next big Bitcoin catalyst, why the crypto industry as we know it might actually be over, and why the corporate treasure strategy is about to move from a niche experiment to a global standard.
I think so, in the sense that I define over as stagnating now, not meaning it obviously goes away tomorrow, but that it's no longer a growth industry. It never really was. It's just that now it's kind of being marked to market. And so if you kind of look at, I think you can kind of measure this in terms of narrative exhaustion. So the really early wave of altcoins was like alternatives to Bitcoin. They're saying, hey, the steelman case to them is, hey, did we get the block size right? Did we get the speed right? Did we get the privacy settings right? Let's throw some alternatives at the wall and see what the market picks, right? That's kind of the early phase. Then there was the ICO one, basically saying, oh, we can just go around the SEC and issue our own securities and then get potentially sued. So that was like the second wave. Then there was the DeFi wave, which is still a really big narrative, but it's actually remarkable how compressed the initial one was. So it kind of really emerged at scale in mid-2020, DeFi summer. And then by late 2021, it hit its peak total locked value and still hasn't quite reclaimed that figure 5 years later. Right, so it's really only had a year and a half bull market, and then it's just been, 4.5, 5 years of stagnation. And as NFTs, as you mentioned, were another narrative that kind of came soon after. That was kind of a flash in the pan. They still trade, obviously, but they're nowhere near the liquidity and size that they were. Then there's been a little bit of a resurgence in privacy coins for a while, which I think that's kind of over now. We'll see if that that could have another round of legs to it. Meme coins had a couple attempts. And kind of this last cycle, there really was no narrative. The narrative was kind of meme coins, and I think that's almost like the final cycle, where it's like you don't even pretend that there's something innovative here. It's just like it's basically player versus player competition.
This is a hot take that most of the industry isn't ready to hear. Alden is describing narrative exhaustion. From ICOs to DeFi to NFTs, each wave of crypto innovation has become shorter, weaker, and more speculative. When the primary narrative of a multi-billion-dollar industry becomes meme coins, you've reached the final cycle of the casino. There is no longer a pretense of building the future of finance. It's just player versus player gambling. But while crypto is stagnating, Bitcoin is separating. Alden points out that while these subsectors are failing to reclaim their old highs, Bitcoin is maturing into a serious financial asset that Wall Street and the White House are finally forced to acknowledge. The noise is dying, but the signal is getting louder.
And where I would certainly agree with them is I think the long-term opportunity for that is huge, because right now, if you're a company, holding cash is a liability over, more than a certain amount, because you're just getting diluted over time. And so they end up decapitalizing themselves. They buy, they deplete their cash, they buy back their own shares, or they pay out dividends, which is all great. But if they purposely are doing that, and then they get hit with something unexpected, something, maybe you're an airline and you get hit with a pandemic, or you're a tech company and you get hit with a major new competitor. You already decapitalized yourself, and so you have fewer options. And really, and they've all been punished for holding things. And you can only hold so many securities until you run into, you get treated more like an investment vehicle rather than a corporation. There's kind of limits on that kind of thing. And so really Bitcoin is this kind of opportunity to hold a scarce liquid asset at least alongside any other, it doesn't mean you can't also buy back shares or pay dividends or hold some cash, but it's a whole nother thing that they can choose to store up. I mean, it's volatile, so many companies won't put all of it in like a pure play would, but they can hold some aside and say, here's another lever that we have as a corporation to retain profits. And I think the runway for that is massive, even though I think it's slow to form.
This is a fundamental shift in how businesses operate. For decades, companies have been punished for holding cash because of inflation. This forced them to get rid of their reserves through buybacks and dividends, leaving them fragile when a crisis hits. Alden is proposing that Bitcoin solves this decapitalization trap. It gives a corporation a way to retain their profits in a scarce liquid asset that doesn't melt away. Imagine an airline or tech giant that doesn't have to start from zero every time the economy wobbles because they have a digital gold reserve on their balance sheet. This isn't just about Michael Saylor anymore. It's about a new playbook for any viable business to protect its future. It's a slow-moving trend, but as Alden notes, the runway is virtually unlimited.
They can potentially again target different risk groups, but I do think that there is a liquidity network effect, which is that let's say your market cap's only half a billion and your
Hmm.
daily trading volume is some percentage of that. That means giant institutions don't really even look at your product because they might want to move 5 billion in a day and they can't with your product. On the other hand, if you're 10 times bigger, right, and you got 5 billion outstanding and much higher trading volume, some of those larger entities might start looking at it. And if some can get even bigger, if they can become a $20 billion one, then some really big pools of capital can start to take notice. So it's like almost like you have to graduate to a certain size before even bigger pools of capital even notice you and then can start using you. And that's why there's like a self-reinforcing network effect if you're the top one or the top few in a given jurisdiction.
Size is the ultimate filter in global finance. An asset can have the best technology in the world, but if it isn't liquid enough for $1 trillion fund to buy in without moving the price, it doesn't exist to them. Bitcoin has finally graduated. It has reached the threshold where it is large enough to be noticed by the biggest pools of capital on Earth. This creates a self-reinforcing loop. More liquidity brings in bigger players, which creates even more liquidity. We are moving past the era of retail speculation and into the era of institutional necessity. When you combine this liquidity network effect with the corporate adoption we discussed, you start to see why the iPhone moment is the perfect analogy. The infrastructure is finally ready for the world. Lyn Alden's outlook is clear. The era of crypto gambling is ending, and the era of institutional Bitcoin is just beginning. The knobs have been tuned and the gate is open. If you enjoyed this forward-looking analysis, hit the like button and subscribe. I want to hear your thoughts. Do you agree with Lyn that crypto narratives are exhausted, or is there one more cycle left in the altcoin markets? Thanks for watching, and I'll see you in the next one.